Let's just start. Assalamu alaikum and good day to everyone. This class is going to serve two purposes. One is orientation class for the reset batch, and second, obviously, a live revision class for the regular students. And at the end of this class, I'll mention exactly how many lectures do we have in our taxation course. Let us discuss this question. This question is basically on two topics. One is, you can say, the basics of taxation plus the employment income. And it's a 15 marks question. So obviously, before attempting this question, students should have seen the lectures on basic taxation as well as employment income. In that case, they will be in a really good position to answer the question. It's a 15 marks question. Requirement number one: state one advantage and one disadvantage for an employee if their employer payrolls the taxable benefits provided to the employee. Okay. Actually, if your employer payrolls your taxable benefit, and it normally happens, okay, basically how it works, let me explain. If you are working in any organization, and let's say that organization, in addition to the salary and bonus, let's say they are giving you other benefits as well. They're giving you other, I would say, non-cash benefits. For example, they are giving you a car for personal use, and let's say other assets for the personal use. So normally what happens, when these benefits will be under the payroll scheme, so what happens, your employer will automatically be paying the tax on these taxable benefit, obviously on your behalf. So under the pay system, your tax will automatically be deducted. So logically, you should not be worried about any unexpected tax liabilities, especially in respect of the taxable benefits. They have been payrolled. So this is the benefit, that you will not be having any unexpected tax liabilities. Plus, those benefits, they are payrolled on it. There's no need that to represent those benefits on self-assessment return, because they are already on the payroll. Now, what is the disadvantage? The disadvantage is, I would say, generally, tax under pay is collected earlier than tax under self-assessment. So the disadvantage is, tax under pay. Pay is pay as you earn. Let's say you are paying tax in advance. So obviously, the disadvantage is tax under pay is deducted, collected earlier than tax under self-assessment. It means, see, examiner has asked you only one advantage and one disadvantage. For an employee, if their employer payrolls the taxable benefit provided to the employee. So if I just quickly write the answer here. Advantage, as we just discussed. See, employees will have no unexpected tax liabilities in respect of taxable benefits that have been payrolled. So employees will not have any unexpected tax liabilities relating to the taxable benefits that have been payrolled. Disadvantage is tax under pay is collected earlier than tax under self-assessment. Tax under pay is collected earlier than under self-assessment. Since examiner has asked one advantage and one disadvantage, so especially while answering the such question in exam, stick to only one advantage, one disadvantage. If you're writing more than one, you will not be getting any additional marks. Okay, after that, look at the part B. Calculate how much more income tax Jason will have to pay for the tax year 23-24 if he takes up the offer of employment with subsequent PLC rather than remaining employed by initial PLC. So it means he's already working for initial PLC. But if he leaves initial PLC and goes towards subsequent PLC, so they're asking how much additional income tax he has to pay. Obviously, when a person switches job from one employer to another, then that person will obviously get a increased salary. So right now, Jason is more interested that how much additional tax do I need to pay? So calculate how much more income tax. In this case, actually, you have to have the income tax liability when Jason working for initial PLC, and then we have to calculate the income tax liability again when Jason works for subsequent PLC. So only in this case, we can easily answer how much additional tax Jason, how much additional tax Jason is required to pay if Jason opts whatever the offer of subsequent PLC is. Okay, notes, your answers should be based on separate calculations of Jason's employment income for the tax year 23-24 under each employment alternatives, which is very logical. You should indicate by the use of zero any items which are not taxable or deductible. Any item which is not taxable, deductible, for example, if there is any exempt benefit, you have to write zero in order to not to get zero mark. If you're not writing zero for an item for which you should have written, then obviously you will be losing marks and you will be getting 0 marks for that. You are not required to calculate Jason's national NIC because they have mentioned just he's interested in income tax liability. Okay, so let's deal with part B, then we'll come to inshallah part C. So simply all we need is first we have to calculate income tax liability under each, let's say, employment option. This scenario relates to 3 requirements. I think out of 3, 1 we have done. You should assume that today's date is 15 Feb 2023. Jason is currently employed by Initial PLC as a sales manager, but is considering resigning on 14 March 2023. Okay. And taking up an offer of employment with subsequent PLC, which would start on 15 March 2023. If employed by subsequent PLC, Jason will receive a higher base salary and more benefits compared to if he remains employed by initial PLC. Fine. They are just giving the reason why would Jason go for subsequent PLC. However, Jason wants to know how much more income tax he will have to pay for the tax year 23-24 should he take up the new offer of the employment. The following information is available for the tax year 23-24. Initial PLC, for which Jason is already working. if Jason remains employed by initial PLC, rather than taking up offer of employment with subsequent PLC, he will be paid a gross salary of 1,80,000 pound during the tax year 23-24. It's a really big salary. So why Jason wants to leave this job, we have to see. Jason will contribute 8,000 into initial PLC occupational pension scheme. Please listen. When an employee contributes in occupational pension plan, such a contribution reduces the employment income for that employee. Another point, if employer is contributing in occupational pension plan for the employees, such contribution is exempt. But over here, what is happening? Jason will be contributing. So this 8,000 will be deducted logically from this 180. Initial PLC. Just take one. If Jason is working for initial PLC, so we need to calculate income tax liability. Salary they have given us 1,80,000. When an employee contributes in occupational pension plan, such contribution will reduce the employment income. Less employees contribution in occupational pension plan, which is 8,000. Let's go back to the question. Okay. In addition to his salary, Jason expects to be paid the following bonuses by initial PLC. Wow. Jason will not only be getting salary, he will also be getting a bonus. Wow, Jason. Wow. Amount is 22,000 pound. Date of payment is 30th April 2023. That is date of payment. Date of entitlement is 15 March 2023. In respect of the year, right now, in respect of the year are not so relevant because this person is not the director. When we are just calculating the benefit of the bonus for the employee, you have to just focus on two dates. Number one is the date of payment, when employee has received the bonus, and the second is date of entitlement. And bonus becomes taxable at the earlier of date of entitlement and date of payment. So obviously the date of entitlement is earlier than the date of payment. So the first bonus, which is 22,000 on 15 March 2000, can I say this date? Logically 15 March 2023. Actually, this date falls in the tax year 22-23. And right now, we are working for the tax year 23-24. So can I say logically, the bonus of 22,000 does not relate to the tax year 23-24. It actually relates to the tax year 22-23. Now look at the second bonus of 24,000. Date of payment and date of entitlement. Yes, look at this date of entitlement. Can I say logically the date of entitlement falls in the tax year 23-24? Why? I think everyone knows that tax year starts from 6 April. Let's say the tax year which starts from 6 April 2022 ends at 5th April 2023. So obviously the entitlement date of 15 March 23 falls in the tax year 22-23. 6 April 2023 till 5th April 2024. The second entitlement date is 15th April 2024. Obviously, this date falls in the tax year 23-24. So the first bonus is taxable in the previous tax year, but the second bonus is obviously taxable in the current tax year. It means and it was mentioned in the question, if there's any information which does not require any effect, then you have to write 0. So can I say bonus, the one which is on 15 March 2023, just 0. But the second bonus definitely falls in the current tax year. Bonus 15 March. So we'll consider this one, which is 24,000. Okay. Throughout the tax year 23-24, Jason will be provided with a free meals in initial PLC staff canteen. The total cost of these meals to the company will be 1,440 pounds. Okay, that's a lot. Free meals in the staff canteen are available to all of initial PLC employees. Can I say since free meals in a staff canteen is available to all the employees, so that is why it is an exempt benefit. And you have to just write 0. So it is staff canteen, free meal, exempt benefit. Because these free meals are given to everyone. It is mentioned in the question. They're giving free meals to everyone. In the staff canteen, free meals are available to all the employees. Since they are available to all the employees, that is why exempt. Exempt benefit, that is free meals, we have to write 0. After that, they're giving us the information of subsequent PLC. So I think we can very easily calculate the total employment income. Let's calculate total employment income. Here comes your employment income. 1,80,000 minus 8,000. I need answer, please. Can anyone calculate this? 1,80,000 minus 8 and obviously plus 24. What are we getting? What is the amount of employment income? What is the amount of employment income? $180 minus 8,000 plus 24. 196. Okay. Obviously, by looking at 1,96,000, we can easily say that this individual will not be getting any personal allowance. And right now, we have been asked only one thing: how much additional tax Jason is required to pay if he opts subsequent PLC offer. So don't worry at all. We'll come to that. So far we have calculated employment income plus we know one thing. By looking at 1,96,000, we can easily decide Jason is not getting any personal allowance, because when your adjusted net income is either equal to or more than 1,25,140, then your personal allowance becomes 0. So, okay. Your answer should be based on the separate calculation of Jason's employment income for the tax year. We have calculated employment income if Jason works for initial PLC. Now let's see what offer subsequent PLC is ready to give to Jason. Subsequent PLC. If Jason takes up the offer of employment with subsequent PLC, then he will be paid a gross salary. Wow, the salary is really high, 2,05,000, higher than what he is getting in initial PLC. So now, subsequent PLC. Salary 2,05,000. Subsequent PLC will contribute a total 9,000 into the company's occupational pension on Jason's behalf. I think we have already discussed when employer contributes on the behalf of employee, such contribution is an exempt benefit. So employer's pension contribution is an exempt benefit. So employer pension contribution. Exempt benefit, just write 0. Okay. Throughout the tax year 23-24, Jason will be provided with a hybrid electric car. Oh, wow. Which has a list price of 62,500 and an official CO2 emission rate is 25 grams per kilometer. It has an electric range of 25 miles. Jason will not be provided with any, or Jason does not need fuel. But it is mentioned here, Jason will not be provided any fuel. Okay, now listen. How do we calculate car benefit? It's very simple. Can I say all you need is take the list price? And we need to multiply this with a CO2 percentage. It gives you the car benefit. Obviously, they have given us a list price. Now, We just need to know the CO2 percentages. See, if the CO2 emission of a hybrid electric car is between 1 and 50 grams per kilometer, and the electric range is less than 30 miles, then your percentage is 14%. Repeat. If the CO2 emission is between 1 and 50 grams, and electric range is less than 30, then it is fixed. The percentage is 14%, which means that very easily we can calculate the car benefit, and car will be given to Jason throughout the year. So here comes the car benefit. List price is 62,500 into 14%. Please, can anyone use a calculator? 62,500 into 14%. What are we getting? 62,500 into 14%. 8750. Now let's go to another point. For the period from 6 April to 31st July 2023. From 6 April to 31st July 2023. Subsequent PLC will provide Jason with a living accommodation in a property purchased by the company in 2013 for 1,40,000. The way back, property was purchased by this subsequent PLC in 2013 for 1,40,000. Obviously, an expensive accommodation. The property will be valued 2,85,000 on 6 April 2023. The property will be valued 2,85,000, the market value, on 6 April 2023, and 6 April 2023 is the date when this property will be handed over to Jason. Can I say for 4 months? Because from 6 April, if you count the time period till 31st July 2023, so we have 4 months. So logically, this property will be given to Jason for 4 months. Improvement costing 17,000 were made to the property during August 2021. See, the rule is, if there is an expensive accommodation which you have given to your employee, then you have to do one thing. Not the current year capital expenditure on the property, previous year improvement or previous year capital expenditure on the property will be added to the cost of the property. But now you need to understand one thing. Since this 17,000 capital expenditure was incurred before providing this accommodation to Jason, and when this accommodation was given to the Jason, number one, more than 6 years have been passed. And second, the market value, which is 2,85,000, this market value is after the capital expenditure of 17,000. So since the market value of 2,85,000, this market value is after the capital expenditure of 17,000 has incurred. After that, the market value is 285. So logically, the market value of 285 will itself have the impact of this 17,000. So you're not supposed to add this 17 to 285. Another thing, while calculating the additional benefit, because it is an expensive accommodation, original cost will be replaced by the market with the market value. Why do we need to replace original cost with the market value? Because when this accommodation was first handed over to Jason, At that time, more than 6 years of the purchase of this accommodation have been passed. The rule says when more than 6 years have been passed, then cost will be replaced with the market value. So we have to calculate the additional benefit, but only for obviously 4 months. Annual value of the property is 4,800. So annual value means simply rent of that property. So we have to calculate the normal basic benefit of the living accommodation as well as additional benefit. But a very important point is additional benefit will not be calculated on the cost, it will be calculated on the market value. So it means subsequent PLC is here. So if we calculate living accommodation benefit, living accommodation benefit. The basic benefit of annual value, they have given us annual value 4,800. Please, I want someone to use a calculator. 4 upon 12, and then we have to take the additional benefit also. While calculating additional benefit, we have to work on market value, which is 2,85,000 minus. Okay, let's see. 1,600. Annual value benefit is 1,600. So market value minus 75,000. In Finance Act 2023, official interest rate is 2.25%. Into 4 by 12. So 285 minus 75,000, you will get 2,10,000, then into 2.25%. Then into 4 by 12. So what are we getting? 285 minus 75 into 2.25%, then 4 by 12. What is the answer? The answer is 1575. Okay. It is 1575. Let's go back to the question. We have done this fourth part as well, now fifth. On 1st August 2023, subsequent PLC will provide Jason with an interest-free loan of 1,40,000 to help him purchase a main residence. No loan repayment will be made before 5th April 2024. Now listen. Actually, it is a beneficial loan. We know that. In case of beneficial loan, what do? We actually calculate the taxable benefit by using average method as well as accurate method. Then we opt the method which results in a lower benefit. But over here, number one, it is interest-free loan, and the second, Jason has not made any repayment. In that case, since it is interest-free as well as there's no loan repayments made by Jason, in that case, either you are calculating taxable benefit by using average method or accurate method, you will get the same result. No difference at all. So things are easy. Simply from 1st August 2023, if you go till 5th April 2024, we have 8 months. So 1,40,000. Official interest rate is 2.25%. 8 upon 12. Now, this is simply you are using precise method, accurate method. Even you go for average method, you will have the same result, because in average, what are you going to do? You will take 1,40,000, then 1,40,000 will work as an opening loan as well as, can I say, it is your closing loan as well. Then we divide this by 2. Obviously, 140 plus 140 divided by 2 will give you the 140. And then when you'll be multiplying this with 2.25% and 8 upon 12. So either you are using average method or you are using accurate method, you will get the same result. Because loan is interest free and no loan repayment is required by the Jason. So simply take the beneficial loan benefit. Beneficial loan taxable benefit. Amount of the loan is 1,40,000 into official rate is 2.25%. 8 upon 12. Please, I need help. Can anyone give the answer? What is the answer? 1,40,000 into 2.25%. Then 8 upon 12. Students, please reply. One lakh 40 multiply by 2.25%. 2,100. Okay. Where possible, subsequent PLC will payroll the taxable benefit provided to Jason. So the related income tax liability will be collected under pay along with the tax on his salary. Jason will not have any other taxable income. Okay. Please, I need the total of employment income if Jason works for subsequent PLC. What is the total? We need total if Jason works for subsequent PLC. 2,05,000 plus 8,750 plus 1,600 plus 1,575 plus 2,100. So may I know the answer of employment income? What is the answer? But there is no answer. Wait, let me show you the result again. Okay. It is 2,19,025. Obviously, by looking at 2,19,025, we can easily decide either Jason is working for initial or subsequent. Jason is not going to get any personal allowance. But again, this is not the final answer. We just need to calculate how much additional income tax Jason is required to pay. Now listen, if Jason is working for initial PLC, then Jason will generate 1,96,000. If Jason works for subsequent PLC, then employment income will be 2,19,025. So all you need is simply, you just need to calculate how much additional income Jason is going to have if Jason works for subsequent PLC on that additional income. How much additional income tax Jason is required to pay? And can I say the applicable tax rate will be 45%? Because by looking at 196 and 219025, obviously any amount which is over and above The rule is, we know that now the higher rate band limit is 1,25,140. Basic rate band is 37,700. So after the higher rate band limit, additional rate is applicable. So it means any income which is obviously additional than existing what Jason is getting from the initial PLC, applicable tax rate is 45%. Because simply we can say that by looking at 196, we can say that Jason is an additional rate taxpayer. So let's quickly calculate additional income tax. Additional income tax. You can say that on additional earnings. Applicable tax rate is 45% because Jason is an additional rate taxpayer. Jason is an additional rate taxpayer. So simply 2,19,025 minus 196 into 45%. So can anyone tell us the answer? What is the amount of additional tax? 2,19,025 minus 196. What is the amount of additional tax? 2,19,025 minus 196 into 45%. We're getting 10,361.25. Let's take it 61 only. So additional tax is 10,361. So simply if Jason works for subsequent PLC, then additional tax which Jason will have to pay is 10,361. Okay. If Jason decides to resign as an employee of initial PLC on 14 March 2023, we know that this date actually falls in the tax year 20 to 23. Yes or no? Briefly explain the main content and purpose of pay form P45. See, if Jason resigns on 14 March 2023, what exactly form P45 will show regarding Jason? Obviously, form P45 will show all the taxable earnings and the income tax deduction up to 14 March 2023. Together with, there will be a tax code as well. And what Jason is going to do? Jason is required to give the copy of P45 form to subsequent PLC so that they will be able to calculate pay properly. And I hope that you people, every one of you is having the focus notes. In focus notes, actually entire taxation I have covered within 60 pages, maybe less than, in fact, less than 60 pages. If you don't have the focus notes, so you can ask the admin, they will share with you in your relevant WhatsApp group. You just need to ask the admin, please share focus notes. So they will share with you. They're going to share with you. And those notes will really help you in a quick way to, recap all the rules, especially these small points. So see, number one, Let me repeat, Form P45 will show Jason's taxable earnings and the tax deduction up to which date? The date 14 March 2023, because this is the date when Jason is going to leave initial PLC. So simply Form P45 will show Jason's taxable income and tax deductions up to 14 March 2023. And there will be a code as well. Together, his tax code at this date. Now, what Jason is going to do? Jason is required to give copy of this form to subsequent PLC so that they will be in a position to calculate payee correctly. Jason should provide copy of P45 to subsequent PLC so that they can calculate Jason's pay can I say for the remainder of tax year, because tax year has not finished yet, for the remainder of tax year 2022-23. So basically when Jason is leaving the initial PLC, then we need form P45. On this P45 form, there will be taxable earnings of the Jason and how much tax has already been collected under pay. And this form will, Jason is required to give it to the new employer. So the new employer should be able to calculate pay for the remainder of the tax year 22-23. Okay. Now, just one information and then a little announcement. Okay. If can anyone tell us right now exactly how many lectures are on the portal? Can anyone tell us how many lectures are on the portal regarding taxation? Around 51 to 53. Now let me tell you. Actually, I would say what exactly we're offering in taxation. I just want to tell this for the resit batch. You will get entire tax within 55 lectures, and where each lecture is just on average 45 minutes long. Not very on average. But after that, you will be having number of practice videos, and most of the practice videos, which from here onwards, I'm going to record and conduct. Majority of the practice videos, they will be covered in a live revision classes. So obviously for that, I really appreciate my students to come up and take those classes. So it means this, then we'll be having practice lectures, practice videos. If I say practice videos, so you should, from 56, it will go at least till 90 practice videos. Plus, I think you people are having notes as well. Within 60 pages, you will get entire taxation, each and everything just within 60 pages. And to be very honest, see these practice videos, if you come up and take these classes as live, automatically your understanding will be really, really good. Now, there's a little announcement. Basically, I just want to finish today's class a little bit earlier. But I just want to ask those students that are present right now, is it possible, basically I have to just attend a meeting. Is it possible if I call you people after 2 or 3 hours to have another class today? Can you people come again? Please reply. Is it possible for you? Let's see, what are they saying? Yes, it is ISO 62. It means I would say if this is the case, then we have already started means practice lectures. Okay, so I'm going to just exactly mention the time. So I really want every one of you, if you can come up for the next class today. After 10 minutes, I'll give you the timing of second session of today's class in your WhatsApp group. And let me just write maximum 1 hour, not more than that. Maximum 1 hour. The class will be maximum 1 hour, not more than that. And let me just give ASA. Yeah, all the questions are from the kit. All the questions are from the kit. Let me just give ASA admin number for those students that are watching this lecture, let's say on the YouTube, and they want to connect with us. ASA admin number for outside Pakistan is 00923333666214. Students, they are within Pakistan. The number is 0333366214. So I would appreciate if you people can please do come. After 10 minutes, I'll update the timings. Then we are going to have one more session today, inshallah. And from here onwards, I'll try my best to at least I'm saying 2 classes per week, but I'm planning to go for 3 classes per week for the revision session. And seriously, if you attend the live revision classes, take out a little bit of time, they will be really helpful for you. So thank you very much and have a nice life. See you all inshallah after 2 to 3 hours.